Good evening, everyone. Good evening. So, from the day fully, you are talking about how the technology is playing a major role in finance, especially NBFC. At least we thought we will end up with how the management, senior management feels about technology or feels about digital transformation, which is happening across the country, how it is important where the technology plays a major role. And again, post-COVID, we are looking for as much as in rural India, the kind of expectations set part of business and the customer expectations using technology, leveraging technology and trying to use as much as the kind of expectations set part of both internal and external users. And surely the expectation set for us is for half an hour, but based on your interest, we will try to keep it sweet and small and trying to express as much as from the diversified organizations, how they felt and how the requirement played part of their companies and the customers expected in terms of maintaining the culture and the value system part of the deliverables in terms of finance, empowering values in rural India. Sir, in your company, how you feel the business expectations set part of the digital transformation and how you leveraged the technology part of it in your company?
Thank you. First of all, let us understand one thing. The way people imagine, because they suddenly see 140 crores population, and China also has 140 crore population, and the kind of success or growth China had over a very short period in digital transformation, similarly, people do expect in India. That's how the calculations are made, that's how scale is built, that's how everybody feel it should be done. But one thing about India is multicultural, multilinguistic, and having a big, wide gap between urban and rural. They call India and Bharat. All those things makes it very difficult to have a similar scale that of China. China has one language, and they have one particular way of dealing or educating, so it becomes extremely simple and hugely scalable. So India is not so, therefore there are the challenges. And the challenges, last 5-6 years, there is significant change. In fact, I was definitely rooting for the Aadhaar-based scale-up in inclusion, that financial inclusion of our customers. But what has really hastened is first is demonetization. That really hastened. People realized that it is much easier to shift to digital rather than having the currency, especially at the small ticket level. And the second is definitely during the COVID. So these two are largely influenced and progressed India towards the digital mode much faster. In fact, I remember even a vegetable vendor or grocery shop, everybody were showing the QR code, not willing to take a cash. That kind of a situation had arisen. And that is a really wonderful change, I should say. It's forced on us, nature forced on us, but it did really change. So everybody understands the advantage of digital mode, but even today, I think still around 70% of the people need assistance to deal with digital transaction. See, that is where the risk lies. When there is assistance from somebody else for making a digital transaction, it can be misused, or there is a huge risk. That is something which every one of us in the industry need to understand, not to really force and push customers towards digital rather than trying to build that kind of education, knowledge, and safety factor into our business model and educating the customers. This is something which I feel is necessary before really getting into total digital kind of a situation. So in our company, we are doing a lot of education part of it to the customer so that they are not at a risk of losing their hard-earned money, because ultimately for the people who are in the bottom of the pyramid, for them whatever is the small savings or small earnings, that is the bread and butter of their day, and we cannot be misused. So that's my understanding of the digital journey of the NBFC as of now. Maybe others have a different story to tell. Thank you.
Yeah, great insight, sir. You started with it's the way that your customers, both internal and external, has something to do with India and Bharat, and try to build as much as we deal with people like drivers and the kind of expectations set part of the transportation finance world, and said it's not just a technology, it should be simple to use and try to create awareness as much as so that the digital transformation reaches to all customers, especially in the rural and urban India. So now moving to agro-commercial finance, Mr. Prabhakar sir, like you know very well, especially when it comes to agri, in India, e-business is less to do with electronics and more to do with emotions. And we know very well agri customers are so emotional and trying to connect and trying to build as much as part of the digital transformation. So how your business, your organization is focusing, trying to take agriculture, agri-finance, having the digital transformation post-COVID?
Yeah. Thank you. Thank you, Suresh. Basically, we are into, as Umesh said, we are working into the Bharat, and still our country has 70% or 65% population in Bharat. So, no doubt they have learned how to spend money on digitally, online payment, online shopping. But when it comes to the financial institutes and repayment of loans, because before COVID they availed the loans and they know how to pay the loans. But during COVID, we had challenges that branches could not be opened, so how to deliver the cash. So as Vijay said that yes, there is a assistance required, and when employee assists them, our employees assist them for cash pickup and cash deposit in the bank, there is always risk to the organizations. So we also went for a digitization. We went for a different apps. We use different apps to collect the receipts, hand it over to the customers on the spot, tracking the employees, tracking the customers, confirming with the customers. So, but yes, it is really helpful. Now customers are also getting used to it. Even though if they require help, yes, they take a help of their kids or next generation kids who are that way very tech savvy in rural area, and they are very adaptive also. But going forward, whether all this in rural area, land is always charged with or always owned by the senior person in the family, that is not getting transferred. So these next generations are not going for availing loans from the NBFCs and banks. So older generation goes, but they are not tech savvy. So we have to still take them physically. As one of my co-panelists said, we still work in phygital. That means we have to go take a person physically and then do the transaction digital. So that is still happening. And yes, even though we have started loan origination to disbursement and repayment up to everything digitalized, we still require the customers to help or some support. But no doubt, there is a long way going, and we'll at least it take 4 to 5 years to 100% digitalization. But branches, without branches doing the working as a financial institute in rural area, it becomes a little bit difficult, because unless and until they see the banner of the financial institute, repayment also hampers. I think that's it from my side.
Great insight, sir. Where you said the customers more try to be more still with digital, where not just digital. And the transformation is like COVID has given some part of it, but still it's a long way to go in terms of full digital transformation. And again, it's quite interesting now in terms of the digital transformation in rural India, how you can see where people have already started something called earn to pay model, where the houses what are taken loan so far, the ground floor is been built for shops or even allowed to make some product vendors to use it for the day, and in the nights it was used for the people to stay there. So the second floors were used, which such kind of thing is already transformed in rural India during COVID. And you can see the digital transformation slightly cooking up where how to handle housing loans, personal loans, and trying to enlarge that multiple loans, playing part of it and trying to be within the regulator model and helping the people to create an earn-to-pay model, which was coming very disruptive in rural India post-COVID. And we will see enough cases similar time from Mr. Kalpesh, where they are already doing similar tasks, and the expectation set part of the customers were huge, and the mantra is reach and speed. How fast they can reach to the customer, how speed they can ensure the service. So keeping reach and speed as mantra, one finance company is trying to use technology to deliver the services timely, ensure and capitalize the customers to be part of rural and empowering them to use these financial services solutions. Yeah, Mr. Kalpesh.
Yep. Thank you so much. So just taking cue from what Prakash has said, that it is phygital, and in rural it is, what we believe is that it is always going to be a phygital one. Okay. Whatsoever technology, whatsoever platform, fancy apps you use, but the domain is something which is irreplaceable. Okay. You can capture, data points, you can capture fields related to quantitative information, qualitative information. So for example, my company Star HFL, the mobility app that I have deployed over there, it captures 200 attributes. But those 200 attributes are worthless if there is no meaningful information that is getting generated by a domain specific person. In this case, an underwriter. So obviously, sir, domain is something which is irreplaceable, and I think even that stands true for a mark-to-market lender as well. We are not a mark-to-market lender. So technology for us is definitely a big equalizer. It is a big enabler. So what I can do is that, I can offer the same range of services. I can offer the same products. I can offer the similar kind of features, similar kind of hassle-free, seamless customer experience that another mark-to-market lender or a bigger HFC for that matter would provide. But, that facilitation is there. Ultimately, if you are translating it to a, P&L item, obviously technology will, as a capex will be there. It will be a biggest headline item for any growing housing finance company. For us also it is true. And just taking cue from what Umesh sir said, actually COVID-19 pandemic thrusted us to become more digital. So we became digital very early in our journey. We are just a 2-3 year old, 36-month-old organization, but we were forced to become digital. Okay. Our customers had that kind of reluctance to, become digital. But as again, what Umesh sir rightly pointed out, it's a double-edged sword. You give them apps and you give them a whole gamut of experience, and then they are free to run amok. I mean, their imaginations run wild. Okay. And during that period itself, Suresh, what happened is that there were few, fraudulent apps also that were circulating in the market. So these apps were, charging interest rate to the tune of around 2%, 3% per day. Okay, so what happened is that one of our customers missed, his installment, and he did not opt for moratorium because that was not communicated at that point of time. I mean, the information lag is there, reaching out to the people back then. So he kind of in a hurry basically just availed that particular loan. Then we actually, reached out to him digitally, through the call. We explained to him that this is something which is, a fake loan app. We ensured that the installment gets repaid. We basically provided him a top-up and ensured that he becomes, regular in terms of his repayment to that particular app. So obviously the security part of it, being cheated, frauds and other aspects are definitely there, which a particular customer, more importantly rural customer who is, first or new to a digital space, has to be taken care of. What do we do? I mean, as I said, that we are enablers of credit. So what we are trying to do at Star Housing Finance is that we are providing that kind of technological platform which will obviously enable us to optimize our turnaround time. Okay. Rationalize our expenses from the OPEX point of view. So when you are digital in nature, you only need one particular person to source, one person to basically reach out and underwrite, and one person to ensure that, the disbursements happen on time. So your entire cost to income dynamics, which, needless to say, basically becomes rationalized as the scale builds up over a period of time. Your turnaround time, the turnaround time from login to sanction basically gets real, optimized. And that is what is the key in new to credit customer. He probably would either avail a loan from a cooperative bank or a regional or rural bank. But that the turnaround time would be so much more that, the builder would not be ready to, wait for so long. So that's where we as people thought that, technology can be a differentiator over here. Okay, and deploying it basically will ensure the optimal TAT gets served. And we are scaling up, over the 36 months, we have basically provided housing finance assistance to more than 2,000 odd families. And in next 5 years, with all the things being good, we would be probably, providing housing finance assistance cumulatively to 50,000 odd Indian families. So that is there. But as I said, that, technology can be an enabler, but, just getting fixated to technology, there are a lot more features which probably, a housing finance company or a lender would probably not be requiring it, but still ends up buying it. Okay, so those kind of features which are not useful for me, that is something which I have to take care of, from the balance sheet perspective. Obviously, just to, what Suresh said, that's what is called productive housing. So productive housing is going real huge in, rural India. In my native place itself, the ground floor is basically a workshop or a tailor shop or a papad making unit or whatever you may call. And the, additional finance that is required is to basically create one more mala, as we say in, the rural parlance. So obviously, there is a huge market out there. More importantly, the reverse migrated population. The reverse migrated population, those who have gone from, urban landscape to city, and out of that, more than 50% are not coming back. Those basically, form my major customer segment as well. So obviously we are catering to them. How we are trying to, capture the attributes related to is obviously, using, face attributes or, face recognition software, e-KYC validation, digital signature validation, income KYC being, sourced from a particular bank. That particular API is under there. We also use, RPA to a very, very limited extent, but nevertheless we are using it at our centralized office as well to ensure that, right credit decisioning happens at the right point in time, providing the right amount of credit to the end user. So that is what I'm trying to do, Suresh, just to,
Great insights. Since you mentioned rural customers is not so easy to address or handle them. And the way you said, like, that they are not taken for granted. Again, they have that the ways of doing things, and the culture and the value system gives our ancestors ways of seeing financial things. So it's very, very important. And again, you said since it's more to do with the speedy services and TAT, can we take it as like do din mein badle din, within 2 days he will get his disbursement on his account? That's the way it is seen?
That would be too early to say. I mean, but for a salaried customer, obviously, if all the quantitative aspects are being captured within 3 working days, we give a credit decision.
Week's time? 15 days?
Yeah, see, sanction to disbursement is all dependent on a lot of external factors.
So
it's
okay,
not
to
just
start
dependent
with,
on
in rural India, at least disbursement takes 15 days with all kind of expectations.
It takes a lot more than that.
That still 15 days prevails, where in Mumbai or an urban people can take within 2 days. That's a way, and a cooperative people where rural people try to compete with them. But still, the digital has to play a major role and ensure the information, authentic information, so that we can make it faster. That's why now we will move to Mr. Dhruv, where your organization has created enough platform for similar things and ensuring maximum transaction which happens, and trying to empower especially NBFC and banks to get more digital and glorified towards making the customer, again the end customer gets more benefit on this. So your take on that, how do you feel the business digital transformation your company recommends for NBFC?
See, for us, one of the key things that we look at is how do we create a unified platform. Most of the banks, NBFCs today, run various platforms across a lot of segments. Where we come in, that how can we create a more unified solution where the customer starts interacting on a singular platform and is able to get serviced from that platform itself. At Thrive, we work with a lot of NBFCs, banks across India, Southeast Asia and Middle East. And our core is how do I make this customer either come back to the particular bank or the NBFC? How do we help the bank retain this customer? Or how do we help this bank or NBFC engage with the customer better? I feel today everybody has customers. You look at any bank, any NBFC, we talk about millions and millions of customers everybody is having. But how do we engage better? how do we create more depth within the same book is where Thrive comes in. I strongly believe that in about 5 years from now, it will no longer be about only acquiring customers. It will be more about how you are managing your existing clientele. There's no need to, it's like a funnel. You have customers coming in from the top and you have double the customers going down out of the system. That's where Thrive comes in. That's where digitally we are able to plug in that gap and create more value for these organizations and see their customers in a different light. So yeah, that's what we do. And
yeah, great. And again, if you see like how for middle and lower level NBFCs, still they are empowered in that, or they require some basics of some businesses required, some amount of transactions required, then they qualify to utilize your solutions.
Well, today, the mass segment is where we have bring in a lot of focus. We work with a lot of white good companies, along with a lot of NBFCs and banks, as I earlier said. If you talk from a pure number perspective, we from a pure benefits and rewards perspective touch about 35 to 40 million customers in India. And this audience, which probably was never looked at that this guy will need a benefit to come to me, but is changing. Today, a 25-year-old says, what else will you give me? He's not keen only on the core offering that everybody is offering. What else will I get is the question which comes in. There's an old Maruti ad which says, ki average kitna deti hai, right? Now, that's where the young segment, that's where the mass population is getting up and saying, what do I get more? That's where we come in. And we strongly feel that over the next 5 years, we will create platforms which will start servicing over 100 million customers from a pure rewards and benefits perspective. I want to touch every fifth customer going into a bank or an NBFC by way of what we do from a platform perspective. So that's where we are.
Great. Indirectly, you're trying to create an IPL within the NBFCs where they have to come and play with the
That's
large
the
masses.
idea. Nothing big has happened in cricket in IPL, then why not in the rewards and benefit space?
Great, sir. So keeping digital transformation, when you talk about financial services getting transformed in especially NBFCs, how much it requires regulators and the kind of systems, authentic systems which they try to deploy? What are the digital solutions available to make up them and try to certify and support them so that they can take it forward? Or the digital transformation which requires for such NBFCs, you can support them in implementation and trying to help them, guide them, what exactly can be utilized part of the solutions which is available based on their culture and the organization expectation set part of those NBFCs. Yeah, Mr. Avinash.
Great. Thank you very much. So I'm Ashish Agrawal. I'm the director in Resurgent India Limited. So we as a firm are into the advisory and consulting side where we are helping banks and NBFCs. So we have lot many NBFCs, rating agencies, NBFCs. Those are our clients, even the fintech companies also. So for NBFCs, I think money is the raw material. So money is in the two form, either debt or equity. So we help in both the sides. So as he asked that in the regulation point of view, now the RBI has understood that NBFCs are growing. I think they have become very large also, many NBFCs. So the idea is to regulate on the same level playing field where either bank or the NBFC, they should have the same kind of regulation so that there should not be any surprise. It has happened in the past like in ILFS or DHFL. So these things should not happen again and again. So regulatory point of view, many things have already been announced or brought in the system by the RBI in the last 1 year or maybe last 6 months. And they are trying to make it at par with the banks. So that is not I think that is not a challenge also. On the other side, if I see from the digital point of view for the NBFCs, so there is a new term which has come in the system called co-lending. So anybody is aware what is co-lending? Can anybody give me some kind of idea what is co-lending? Do you have any idea? Okay. So what has happened actually now, you have seen that the credit growth is not there of the banks. And in the last 2-3 years, the numbers are not growing. Even if you see the SBI last year balance sheet, their credit growth is negative on the wholesale side. On the retail side, their growth is there to some extent actually. But overall, the numbers are not very, very attractive actually. So what has happened actually, RBI has thought over that NBFCs are having that capability. So there are three parts of any lending actually. One is pre-sanction, another is the sanction, underwriting, and the third part is collection or monitoring actually. So if you see, the NBFCs are good in the pre-sanction or the underwriting also, the collection also. And the challenges of the bank is that they are having a lot of money, but they are not in a position to deploy this money to the ultimate borrower, actually the retail borrower in the rural areas or in the semi-urban areas, because they have their own set of rules. They have the formal income should be there, income tax return should be there, profitability should be there. There are many things are there actually. So RBI has come out with the new guidelines called co-lending, where the banks and NBFCs will join together. And the NBFC is having the strength of onboarding the customer acquisition. So I think as of today, I think every NBFC is doing onboarding through the digital mode actually. So either through social media or through app, this onboarding is happening. On the servicing or the underwriting side also, so there are many tools are available where the NBFCs are using like the analysis of the bank statement, GST returns, the other information. So they are adding with that their underwriting tool, and then they are sanctioning the loan. And third part is collections actually. So still in the NBFC space, we see the 70-80% collection is coming through the, I think, the online process. But rest, still the people are there who are in the field and they are collecting the money also. So keeping in mind all these advantage of NBFC, the RBI has come out where they have said that banks and NBFCs will join together. 80% money will be given by so banks are having a lot of money. They are getting public deposits and all. 80% money will be from the bank, 20% from the NBFC. The NBFC will be the front end for the customer. So if I see the digital thing, in this, there are a lot of digital processes are there which need to be followed actually. So what is happening now, because many people are from the technology side, there is a big opportunity for all of you where the co-lending solutions are required for the banks and NBFC, where both of the banks and NBFCs can come on the single platform and they can do the lending actually. Still, we are talking to many banks, we are talking to many NBFC. There is not a perfect solution with any bank actually. Everybody is looking the solution through which the entire journey can be done smoothly actually, where both the lenders should be on the same platform. The bank should do whatever the eKYC or whatever the process they have to run. NBFC should do the monitoring also, and at the end of the day, the reconciliation should be there. So if you talk to any bank, any NBFC, they are looking this opportunity in a big way. So from digital point of view, if anybody of you can find out the solution for the NBFCs or banks, which is a co-lending solution, it will be a, I think, big business for all of you actually. And in the longer run, what I am seeing, the NBFC will be having more co-lending rather than the on-lending of taking money from the banks for on-lending actually. So from digital point of view, if I see this will be the co-lending will be the game changer, where the banks and NBFC both are coming together. The ultimate borrower will get the advantage of the timely money, because everybody want to get the money at when they need it actually. So timely money at the doorstep and at the reasonable cost. So when the bank and NBFC will join together, the cost will also be reduced. Borrowing cost of the borrower will also be reduced actually to some extent. So this is I think good tool for all the tech companies, where they can I think do some pilot, or they can work out that what are the areas in co-lending which can be automated, so that it can be a ease or it can be a smooth journey for the borrower, the bank and the NBFC. This is my take.
Great insights. Again, you put it in a nutshell to say it's like community cloud, where people, banks and NBFCs all will come together and try to leverage the services faster. And again, you said it's more positive towards co-lending for NBFCs, since the product and other expectation set part of the business can get aligned. Or just to have one question attached to that, to say how much percentage NBFCs are empowered to do digitally co-lending now? Just percentage.
So as of today, I think every bank is trying to do the co-lending. As of today, I think 60 NBFCs have got tied up with the banks for the co-lending. So I'll say that 50-60 NBFCs are there. Those have tied up, NBFCs, HFCs, MFI, those are tied up with the different banks for co-lending. But still, because of technology, the major challenge is coming, the banks are not in a position to do the co-lending actually. So if you see the amount is very less actually, maybe in the thousands, not in the thousands of, I'll say that maybe 1,000 crore or something like that, not more than that actually.
Okay, okay,
So
great.
there is a need of, I think, the huge money is lying there with the banks actually. They want to lend to the ultimate borrower. But the challenge is coming, the technology is not there, so they are not going ahead. I was talking to one bank today morning only. They said they are not having that technology, so they don't want to take any risk on their head actually. Tomorrow something will go wrong. Who will be the responsible? Who will be responsible?
Yeah, yeah. No, great, great. Since you mentioned risk and money is lying, so
Yeah.
one of our agri finance is more keen to
Yeah.
get into that.
Basically, what is happening is banks are not able to achieve the priority sector lending, and hence they need to have that priority sector lending, and it is monitored every month by RBI and quarterly. So to achieve that, they need some distribution channel. And for NBFCs, best way is the base layer. NBFCs have a easier way to get funds. That is one of the best thing for co-lending.
So great, sir. At least districts and towns level, NBFCs are the arm power, muscle power, which they can get to the customers and trying to do it. Sir, coming back to you to have, since Sriram Transport, you know that decades of experience in terms of before digital, now digital, phygital, and you have both internal and external customers, and yours is very unique. It's not like other finance companies you deal with, some customers who are equipped on the technology. So what's your experience in customers, especially both internal and external, especially when it comes to your organization?
Yeah. See, one thing which probably technology will not solve immediately is the customer journey. Because when customer takes the loan, if he is a businessman, so if somebody is employed where the fixed salary comes, that is a very easy transaction. So anyone can do a transaction with that person because everything gets fixed. And no collection also is not a challenge. But when you deal with a customer where the cash flows are not matching, many a times there will be delay in payment or part payment, or his business may need some additional funds, or he also needs some kind of a assistance in the managing the business, or some kind of a support, advice. This is where I feel the human relationship or human contact or human ability intervention is necessary. So if you compare with the international market and Indian market, in India, around 90% of the people who are employed, who are in working, who are earning, they have either self-employment or they're working in individual proprietorship or businessman. So when that is the situation, when the Europe or US, around 40-50% of the people are in organized sector. So there is a difference between the way you need to deal with the Indian businessman, especially individual businessmen, whom NBFCs are lending. Because NBFCs typically lend to self-employed small businessmen and farmers. That's how NBFCs focus on. The banks typically focus on corporate or mid-corporate, that kind of a segment, or a salaried class. So there is a difference. So NBFC cannot get on an automated route immediately on a digital platform and expect customer to understand how to respond to us or how we can reach to customer on digital mode. So NBFC will remain a hybrid model for quite a long time till the knowledge or ability to understand the business model and fine-tune your algorithms, or there are so many things coming, IoT, ML, so many things are coming. All those things to start learning and find a solution may take time. So I feel we need to be more customized and try to make the human intervention necessary to make our customer success.
Great, sir.
Suresh, I would just want to add to what Umesh sir said, that, sir, in our lockdown time, what we started was, a Samvad program we started. So it is basically nothing but a walk the talk with the customer. Just hear him out, just understand him what he wants to say. And an automated telephone call will not serve the purpose. His emotions have to run out. Someone has to talk to him. Someone has to interact with him. Be it digitally, be it over a phone call, that is fine. But you need that human intervention in the lending space, specifically for a smaller HFC like ours, where the customer segment is predominantly first new to credit. It doesn't know the intricacies of repayment. It's totally a repair program basically that we drive through for the first 12 months of his journey. And that's where I think, sir, that we were able to contain the whatever so-called damage you called due to the COVID-19 pandemic is because of the fact that the Samvad program was there. So it was small group of people. We just, taught them how to come on the Zoom call, how to use the Google Meet, how to basically have a video call. And they really understood it very well. And some of them just vented their heart out and we listened to them. These were the ones who basically have reposed the trust in, we have reposed the trust in them and they have paid it back to us. So rightly, sir, that, human intervention is there and domain cannot be replaced is what I wanted to say, Suresh.
It's great. At the end of the day, it's more to do with the real world and the real world. Real world, people do have enough in that. And again, people underestimate rural India. Rural India has two propositions. One is people have money, people don't have money. People have money is less than 48%, and people don't have money is above 52%. So we deal maximum with people who don't have money. They can adjust and fit into any of kind of logistics or digital transformation. But when you try to bring in that 42% of the people who are mostly having money and trying to deal with them, that's what the real stake comes part of it. And surely, sir has put very clearly to find out, like it will take some more time, but we will create stake. We will create the value system so that people appreciate and they can try to utilize the system part of it. Sir, again, coming to Agri, which you know very well, like how things happening part of the customers. You want to make it crisp, like no, this is what Agri will look from financiers, business, where digital should have want to. This is what we look from digital for finance. Is expected from the farmer side, farming.
Most of the organization, like big organization, they started even starting from app, means finance sector, yes, it is totally digitized, you can say. But what about the support to the farmers? Yes, farmers are getting support digitally, starting from his soil testing, water requirement, and so, because we people help them funding through the solar pumps also. So they have started using this. Nowadays farmers, you don't see farmers going during night hours to switch on the electric motors. They do it on apps, or they do it on the phone or SMS. So that is also a very good use of the digitization, and that really helps. So what is missing is, yes, marketing linkage is missing. Yes, marketing, they are getting all the data points of daily market rates and everything. But yes, whether that is getting converted into the good rates, it is not in the hands of digital. It is in the hands of politics and in the hands of the local traders. That getting digitized is really challenging. And yes, Modi government started doing something, so they stopped that. So that lobby, unless and until that is controlled, how digitization will help, I don't think I can say.
Great insights. Adding to that, people have come out with all-in-one tractors and all, where it has taken care more in terms of digital transformation, which will even give the crop price. That's what which you are adding it out. So a lot more is coming, but it will take some time. When you try to
MSP definition, which was earlier only for 8 to 10 crops, now it is for 70, 100 crops. So that always helps. That helps.
Sure. So we will move to him, where housing side, like, or still you feel anything left out for the customers, both internal and external?
Suresh, I only feel one thing, that, it is, all about, developing or enabling literacy amongst this rural populace. Be it digital literacy, more important than digital literacy, that is easily replicable. But something as basic as, what is a bank? What does a bank do to you? How would a loan work for you? What is an insurance? How does it safeguard you against, different exigencies that may come in your life cycle management. So those small things, I think, that education, making a rural customer more financially literate, more financially aware about, his requirements, his needs, will ensure that the right product is delivered to them. He himself will be able to, choose from the host of the products that are being available in the market at whatever rate and whatever cost. Because then at that time, he would be able to make an informed decision making. So that's what I feel that, educating the customer, the end user, on the rural geography of India is something which is predominantly important for any lender or any service provider for that matter.
Great insight. Sir, Dhruv, you would want to add anything on the customer side, like one or two words, like what best?
I think from our side, customer is the only thing which is continuously changing. I don't remember the customer to be the same 5 years back to what the customer is today. And in about 5 years from now, we will see a very different requirement coming in from the customers. That's where I think the whole concept of technology will also evolve. Today, the way an NBFC works, the way they source a customer, is very different to the way we used to do it 10 years back. And if we are not evolving continuously in this journey, people who do that will continuously be way ahead. People who don't will start finding it difficult to catch up.
It's a great option is available. It's people have to opt for it and
It's
thanks.
an option, but we have to. I think to survive, we will have to take that punt.
Thanks. Ashish, you would want to add one or two, so that in interest of time, because already I got a warning. Finish. Regulatory is important. At the end of the day, without regulatory, you can't do it.
Regulatory, I told that although the RBI is coming out with the regulation where they want to make it at par, but still you see that banks are very large. They are in the systems in last many years actually. They have established processes and everything. But and the NBFCs are lending to the small borrower, informal income. There are many other challenges are there which they are facing. If we will bring all the regulation at par, then definitely it will be a problem, because the people who are in the informal system, they are not having the income which is documented and all these things are there. They are not having that habits also where they can be regular in their payments. And RBI is coming out with this, I think, regulation where they are saying that the single day delay is also the delay actually, practically. They want to recognize the NPA on the basis of that whatever the payment is due, if the full payment is coming, then you can make it standard. So I think these things will be very challenging for the small NBFCs, because they are lending to the borrower which is not into the formal system. They are not getting income on regular basis also. They are dependent on other things. So I think it should take some more time. The ecosystem is not, I think, ready for that. And the small NBFCs will face this challenge. And I think there might be a spike in the NPH for some time for them, till the time they will not be in a position to meet out all the requirements. So from regulation point of view, many regulations are coming which are not keeping in mind the small NBFCs, middle NBFCs and the large NBFCs. Although RBI has made the layer also, the NBFC which are in 4 category, base layer and middle layer. But still the regulation point of view, I think they are making it applicable to all of them actually.
Great, sir. Thanks. In the interest of time, I'll quote with on Mahabharat, where who is the happiest person, where it was quoted 3. I'm saying that 2000 years before, they mentioned very clearly, a person who don't have debts, a person who didn't go out of his native for survival, third, a person who grows his own food. All the 3 we don't do anything. Means everybody bonds with the debt and everybody goes out for the survival. Third, nobody grows for their own food. Even they don't know what food they have. So this is a scenario, but how they said doing the research, if you are more as an entrepreneur and if you have quality education, either 2 can be achieved. So keeping that prospect, having the right prospect on that, being an happiest person, try to be in your native, try to create as much value from that side, and try to grow your own food and ensure no debts for in large future. That will help us to be a happiest person. Thanks for all your valuable time.